Welcome to HSBC Global Viewpoint, the podcast series that brings together business leaders and industry experts to explore the latest global insights, trends, and opportunities. Make sure you're subscribed to stay up to date with new episodes. Thanks for listening, and now on to today's show.
Hello and welcome to the Macro Brief, the podcast that looks at the issues driving financial markets around the world. I'm Aline Van Dyne, coming to you today from our New York studio to discuss the outlook for Latin America. Now, investors are very interested in the region. My colleagues across research are getting a lot of questions about Latin America, but also some flows are moving into the region. For example, some of the largest monthly inflows into Brazil's stock market recently. So what are the reasons? First of all, elections could introduce policy changes seen as supportive for markets. Secondly, Latin America benefits from a continued commodity rally. And third, the current geopolitical backdrop favors Latin America somewhat relative to other emerging markets. So is this Latin America's moment? I'm joined by three colleagues who can tell us more. Joseph Incalcaterra, our head of LatAm macro strategy. Daniel Lavarda, our head of economics research in Brazil. And Jose Carlos Sanchez, our Mexico economist. Welcome to the podcast.
Thanks for having us.
Thank you. Thank you.
So Joseph, you've spoken to many investors in recent weeks about Latin America. Why are they so interested in the region?
Yeah, I think there's a few things going on. One, broadly, you can say that growth dynamics are quite resilient. External fundamentals are fairly strong compared to, let's say, other EMs or past episodes in LatAm. But also, we're in a year of, or a few years of political transition. So we have numerous elections coming up, and the elections that have occurred over the last 6 months to a year have generally brought out changes that investors see as market-friendly, right? This is the case in Chile. This is the case in Argentina. We have upcoming elections in Colombia, Peru, and also Brazil. And investors tend to think that these will go in the direction that leads to reforms and market-friendly outcomes. So I think that's the other reason. And then I'd say the last one is, in a geopolitically complicated world, you could say that LatAm is a relative refuge, right? It's not related to the same geopolitical conflicts. It's not as trade intensive, and actually it gets some benefits from some of its commodity exports.
So we'll delve a bit more later into sensitivity to oil prices, given that's such a big topic, of course, globally at the moment. But first, let's just get a bit more context about Brazil, which is, of course, the region's largest economy. Daniel, what's the picture at the moment?
Well, I think the picture is that things seem to be better positioned than the market was expecting. The current situation is that Brazil is basically on these late stages of the business cycle dynamics. The central bank acted. Now they are basically collecting the results of that tightening. So in other words, economic activity has been decelerating, much to do with that. Inflation has come down. But at the same time, you see more positive news coming from other sectors. For example, the current account, also the fiscal account seems to be somewhat more positive than the overall expectations. So in other words, it seems that, in broad strokes, Brazil is kind of a better positioned.
And I would say that these dynamics are particularly good for the currency, right? Because you still have high interest rates because of any lingering inflation concerns, but growth is strong. The current account deficit, like Daniel said, is contained. So this is one of the reasons why we're so constructive on the BRL.
Interesting. Now, Jose Carlos, Mexico is in a slightly different phase, correct?
Yeah, absolutely. For 2026, it seems that some dynamics are changing for good. Exports prove to be more resilient. We think that will continue to be a good source of growth in this year. And in addition to that, it seems that nowadays the market has digested that Mexico seems to be in a relatively good spot with respect to the potential USMCA renegotiation with the US.
So this is, of course, the trade agreement between the US, Mexico, and Canada.
Exactly. And given the very strong ties between these two economies, the US and Mexico, it seems that given the progress of Mexico in terms of some relevant policies for the US, such as migration, security, etc., there can be a stronger case to have a relatively good outcome, and that is kind of supporting.
So are you, like Daniel, somewhat surprised with how things are going? Because I suppose the risks related to tariffs, to trade policy changes, those were considerable not that long ago.
Absolutely. I mean, I think that Mexico's outlook seems more resilient than what we would have thought a few months ago. And there's a special appetite for some Mexican assets given these opportunities. Of course, there will be some challenges in the path, especially when we get into deeper conversations related to the USMCA. But it seems that many themes are kind of getting in good shape and could be some opportunities from there.
Yeah, and I would say for the currency markets, that's exactly it. It's really dependent a lot on the USMCA because as long as USMCA can kind of be renewed in some form, the other problems seem less severe. But if we were to see a surprise on that front, that would be the main risk for the MXN.
So when are those discussions expected to really get into the weeds?
Yeah, I mean, officially on July the 1st, we have the window opening, but it's a positive news that on March the 16th, there will be some preliminary talks to kick off with this process between Mexico and the US. So it can be the case that some of those conversations are getting ahead of schedule.
Okay, yeah, so watch this space pretty soon.
Exactly.
And so let's just look at some of the big risks that the global economy is facing. In the last week, especially, of course, oil prices are front and center. There are discussions about stagflationary risks globally. Obviously, markets have been very volatile. How is LatAm positioned in that context? Joseph, perhaps you can kick off with a look at the market resilience, if any, and then Daniel and Jose Carlos, it would be great to hear how Brazil and Mexico are exposed to oil price changes.
Yeah, it's a good question. I mean, when this first kicked off, we understood that this would be a relative positive for LatAm. So not an outright positive, right, for LatAm assets, because clearly we had a spike in the dollar, we had risk off across the world. So there were, sell-offs in all the local markets. But almost immediately we could start to see that outperformance starting to come through for key currencies and assets in the region. The one we liked the most was the BRL. Because we think Brazil is not particularly sensitive to disruptions to trade flows or the Straits of Hormuz, while it does have positive net oil exports and is just generally seen as kind of a strong macroeconomic story. And I think we have actually been seeing that play out in the markets. And I would say the same for the rest of the region, but it's not as clear cut. For example, Chile is a very big net importer of oil and gas. So is Peru. Mexico is as well, although to a very small extent. So generally speaking, in these types of scenarios with Middle East conflict, geopolitics, we think LatAm is a relative safe spot. But of course, if you mentioned the word stagflation, and if we were to see a spike in stagflation concerns, meaning sustained higher oil prices for a period of time, a slowing in the global economy, that's ultimately bad news for LatAm.
Of course. And Daniel, Brazil, how does this backdrop and especially oil prices impact?
Brazil oil exports have been increasing dramatically in the last decade or two, right? There's a strong debate about the impact of oil prices in emerging market economies and how that's going to translate. Usually, it's like a bearish situation for these emerging market economies, essentially because you have higher oil prices, then higher gasoline prices, then higher prices in general, and therefore that means, for example, lower disposable income and lower economic activity, right? Lower consumption, all these kind of things. But at the same time, in the case of Brazil, more specifically, you had a positive shock in the terms of trade. And in terms of trade is essentially good for economic activity, right? So it's very hard to know exactly which one of those effects is going to prevail at the end. And that, of course, depends on the final level of the oil price. At the current levels, it seems that we are more in the the more positive side, right?
Right.
So in other words, I think that the best way to look at is what I find to be like the 10-10-40 rule. For each $10 of higher oil prices, that essentially translates into 10 billion higher trade balance, 10 billion BRL higher government revenues. So that's good for the external accounts, that's good for the fiscal accounts, and 40 bips of higher inflation.
So clearly a risk that we need to keep a close eye on.
Of course, yes.
And Jose Carlos, any particular sensitivity from the Mexican economic side?
Not really. I mean, Mexico is an exporter of oil, crude oil, but it imports gasoline. So what we had seen in previous oil shock events is that on the one hand, you have oil revenues increasing, but then the government has to increase the effort to support domestic gasoline prices to avoid inflationary shocks. So there's this kind of offsetting effect that it's neutral on the fiscal side. And also on the inflation, given these measures, there is a very small effect. But there's kind of an upside bias, no? Because as you know, given the very strong volume of trade in Mexico and how many goods are moved through trucks on the road, etc., I mean, there's always this consideration to avoid significant hikes in gasoline prices.
But more of a neutral situation for Mexico. So that's interesting.
Absolutely.
And just, Daniel, you mentioned obviously the kind of fiscal premium embedded. How important is that issue, especially in the context of the upcoming elections? I mean, could the fiscal risks come back to the forefront?
Yeah, I think this is actually the key theme, at least from the economics perspective, going on to the elections. Of course, there's also the regulatory stuff and all this kind of government policies and all these kind of things. But in terms of the market pricing, there's a strong expectation that at some point in time, there's a correction being made. By correction, I mean, of course, a fiscal change that would eventually imply Brazil would have a more sustainable sort of a fiscal account moving forward, right? So this is actually the relevant theme.
Let's just end on, what investors should be looking out for beyond the elections, or is that the only thing investors should be worrying about?
I mean, I was going to say, if there's one thing, it's the polls.
Yes, okay. Polls,
well, at least
polls,
for the
polls.
case of Colombia, Brazil, Peru, the upcoming elections. Obviously the health of the global economy, right, is there. That stagflation word come up. But I think really, elections are the number one for most of the region. I would say for Mexico, it would probably be the USMCA.
Yeah, exactly. For Mexico, I would really be monitoring USMCA talks. I think they will set the tone for years ahead, and also the U.S. economy, because of this intertwined relationship with Mexico. It's quite relevant as well.
Right, yeah. I mean, Mexico is still the biggest buyer of U.S. goods.
Exactly.
Right?
It has become the main seller and the main buyer.
Okay, well, really interesting perspectives. Thank you all for the updates, and we will continue to discuss as we get more insights onto some of these developments. Thank you so much for joining us here in New York.
Thank you, Lynn.
Thank you. It's a pleasure.
A reminder that you can keep up to date on our latest reports and videos by downloading our app from Apple's App Store or Google Play. And please listen to our sister podcast, Under the Banyan Tree, where hosts Fred Newman and Harold van der Linde look at the issues driving Asian markets. Finally, if you've got any questions or comments, then you can get in touch with us at askresearch@hsbc.com. This week's Macro Brief was hosted by me, Aline Van Dyne, here in New York, and produced by Tom Barton, my colleague in London. Don't forget to like and subscribe to the podcast, and please share with your friends and colleagues. Thanks for listening. We'll be back next week.
Thank you for joining us at HSBC Global Viewpoint. We hope you enjoyed the discussion. Make sure you're subscribed to stay up to date with new episodes.